when you come back here, you click on this icon with the, what color is this? Yellow. This icon with the yellow folder and the yellow star. Click on it. Then you come over here. You see they've written indicators. What you want to do is you place your cursor on the indicators. Then you right click. Then you click on refresh. Once you click on refresh, the indicator you have added will come and be part of your list of custom indicators here. These are custom indicators. They are not inbuilt. I explained that in one of our earlier webinars. So once it's added over here, you will see it appear this way. This is the indicator I shared on the group, SM work time V1.5B. So you click on it, then you drag it onto your main chart, drop it there, and then click OK. You see, boxes have been added. Now, the purpose of the boxes is to show you the sessions. This box, please, those who are asking for the link, it's about to be dropped. Someone is asking, please, this indicator is for only MT4. It won't work on MT5. We have MT4 on our platform, so please download it. It makes things very simple for you. It's for only MT4. It won't work on MT5. So this box you are looking at, okay? This box you are looking at is the Asia session box. I hope you can all see it. Asia session box. Like I was telling you in our previous webinar, the Asia session, according to the market makers timetable, officially opens at 11 p.m. It opens at 11 p.m. Then it closes at 6, is it either 6 or 6 a.m.? Yes, it closes at 6 a.m. No, it closes at 7 a.m. Then when it closes, the London session also opens. Sometimes there's even an overlap. You find that one session is still in session, then a new session also opens. Then eventually the previous session will close. Then the new session will continue. So this is the Asia session box. This box over here, I think it's a sea blue color or whatever color it is. It's sea blue. And the candlesticks you are seeing right from here to the top, between this box and this box, is London session. Let me demarcate it so you see what I'm talking about. This is what I'm talking about. This is London session. This is London session. Then New York starts from here and enters into this box. We are still in New York just closed. New York closes at 8 p.m. according to the market makers calendar. So right now, if we were to go by the general knowledge out there, which is a 5 sessions, we will now say that we are in New Zealand session, New Zealand and Australia session. But like I said, those sessions are not very relevant, so we will not be talking about them. We will not be talking about them. Very good. So let me show you. We analyzed GBP USD, and I told you it was going to go up. Now, I told you the dollar was going to be weak. But then on Monday, I also updated you in the group, and I told you that we are likely to see dollar strength on Tuesday. And on Tuesday, indeed, the dollar was strong. It was just retracing. So I told you to be careful with the setups. If you remember, I made mention of it in the group that the dollar was going to be strong on Tuesday. And on Tuesday, it was strong. So this box over here is today's box. This is Wednesday. From here to here, this vertical line to this vertical line is Wednesday. This was yesterday, Tuesday. This was Monday, okay? And this was last week, Friday. So look, this is the trade I was talking about, the GBP USD. Now, I have already taught you how to identify the daily highs and lows, but let me take it again. As far as today's price action is concerned, this is today's cycle. From here, this vertical line to this vertical line. So if you want to know today's trading range, when we say trading range, we are looking at the market as far as the daily cycle is concerned, from the highest point to the lowest point, or from the lowest point to the highest point, depending on whether the market is bearish or bullish. So as far as today's price action is concerned, this is the daily range. This is the highest price went today. And that was during the London session. So we placed a horizontal line over there like this. And this is the lowest it went. This was the New York reversal over here. So this is today's trading range. You see, from this low to this high. Before you can trade a daily cycle, first of all, you have to become really, really good at identifying the daily range. And by identifying the daily range, you have to know the highs and the lows. And it's very, very easy when you switch to the 15-minute time frame. When you come here, after you've added your period separators, from one vertical line, these are the period separators, the vertical lines. From this one to this one is 1 day. So what you are seeing here is today, Wednesday's price action. So as far as today is concerned, this pair, GBP USD, has been trading between 1.30050 and then 1.30677. That is vertical lines of, okay, I'll need them over here. So let me go back there. So like I said, this is Wednesday, this is Tuesday, this is Monday, and this is Friday. So assuming you were coming to trade the daily cycle on Monday, knowing the trend, GBP USD, though it is dropping now, long term is still bullish. It is only dropping because it has run into intermediate term resistance. There was a break in market structure on the daily time frame. It has to come back to test that break in market structure, and that break in market structure will act as support before it continues its bullishness. So we will see some drop in GBP USD, which is a retracement, but long term it is still bullish. So as we analyzed on Sunday, GBP USD was what? Bullish. So if I wanted to trade the daily cycle, I already know that the market is what? Bullish. So how would I have done my analysis? I would have used the previous week's low, because it's a bullish market. So I'm interested in the low, which is support, the previous day's low, which happens to be last week, Friday. You know, the market closes on Friday, 9 p.m., then opens on Sunday, but we'll consider Sunday's opening as Monday. So I would have, knowing that the market is bullish for this pair, this would have been my reference point, because that was Friday's low. Look, this box was Friday's price action. That was Friday's low. Now, this pair, GBP USD, take note of it. Because of the presence of the dollar in this pair, we usually see its true intention during the New York session. So one is Asia, you have no business trading GBP USD. When it's London, you have no business trading GBP USD. I'll explain this into detail when we get to time and price analysis. It's not all the time you have to be in the market. There are certain times you shouldn't be in the market. You should be out. There are certain times when you should be in the market. So this thing happened during a time we call the New York kill zone. It's a kill zone because that's the time you see the true intention of the market. So you enter at that time, at that point, like a sniper. Then you get out after some hours. I will show you exactly when you should be getting out. So this would have been my point of interest, which is the lowest point, the previous day's low, which was last week Friday's low. Where else would I have looked at to find my range? This is my range. Now we analyze the chart from left to right. We don't analyze the chart from left to left. So once I have found my low, I'm now looking for my intraday high. Now, where's my intraday high? And I'm telling you, this pair, you see its true intention during New York. So you have to wait for Asia session and you have to wait for London session to be over. So we would have been looking for our high between the Asia session and the London session. Now, this is the Asia box. So this was the highest price went during Asia. But then during London, it went higher than it did during Asia. So this was our high as far as the London session was concerned. So this would have been our range. We would have drawn our low, Friday's low, then our high would have been London high, right here. So how would we have known exactly where to enter? This is natural support and resistance. But in order to know exactly where to enter, we would have used implied support and resistance. Remember what I mentioned on Friday's webinar. I said we have natural support and resistance and implied support and resistance. So we have identified the range using natural support and resistance. Then now we would have used implied support and resistance in order to get a good entry. So I will show you Fibonacci and I'll explain to you how Fibonacci works. Now, some of you already trade, and I believe some of you already know what Fibonacci is. But once I plot it, you realize that it is not the ordinary Fibonacci you know. The settings are different. This one is customized. It is not the ordinary one you know out there. Like give you information that not a lot of people have access to, because this market has got secrets that we have come to know, and we'll be giving you some of those secrets. But for those of you who fund $1,000 and above, we'll give you all the secrets. We'll show you how to identify liquidity, how to identify fake moves. This over here was a fake move. This down move, It's called a Judas swing. So you wouldn't have entered on this trade. So now, in order to know exactly where we would have entered, we have already established our range, which is last week Friday's New York low, and then Monday's London high. Look at the New York box. Look at where my cursor is. This was last week Friday's New York low, and this was Monday's London high. So we would have taken our Fibonacci tool, then we would have plotted it from the lowest point of the range to the highest point of the range. Now watch me. We would have plotted it this way. We'll click on the low, then we drag it up. We'll drag the Fibonacci up. We are dragging it up to the next red horizontal line, which happens to be London's high. That is our upper range. And we would have dragged it. You can see that the Fibonacci has got certain parameters. We would have dragged it up to where we have written profit scaling, and we would have ended there, right on profit scaling. Please, I have just plotted the Fibonacci. If you can see some black horizontal lines with certain parameters or writings, type yes. So I'll explain how we use Fibonacci to you. Very good. Now, a lot of you are typing yes, which means you can see it. For those of you who are asking for the links, they have all been dropped. Please follow the links and join our various platforms. Very good. So look very carefully. I'm already teaching you implied support and resistance. Yes. These lines, vertical lines you are seeing here, are basically acting as support and resistance. Now, who is Fibonacci, or what is Fibonacci? Fibonacci was an Italian mathematician some centuries ago, and he was a very, very brilliant man. He came up with what is referred to as a Fibonacci sequence, and we see it recurring in almost every aspect of life. If you look at the petals of a flower, how they were designed by God, you can see that God designed them using a certain sequence. And this guy studied that sequence and he named it after himself. His name was Leonardo Fibonacci. So he discovered it. So he named it the Fibonacci sequence. Now, Fibonacci exists in almost every aspect of life. And Forex, mathematicians also studied this market. So once they studied it, they were able to come up with the Fibonacci sequence that we are able to use in Forex to identify support and resistance areas. We call them implied support and resistance areas because they were not generated by price action. They were generated by mathematical studies that help us to know where to enter. Now, Fibonacci itself does not do any magic for you. The magic lies in your ability to identify the trading range. Then you plot the Fibonacci accordingly. Now, let me give you a trick or a clue over here. I want you to see Forex not as a get rich quick scheme, though Forex will make you very rich. Forex is a business, just like any other business. Now, let me give you an analogy. We have two businessmen. We have Kofi and Kwabena. Kofi and Kwabena are both phone dealers. They have gone to the phone market to buy phones to come and sell. There's a particular phone brand out there. Let's say it's a Samsung phone. Now, the market value of that Samsung phone is 500 cedis. Okay? Kofi goes and then he's able to bargain with them and he buys it. The market value is 500 cedis, but Kofi is able to buy it for 400 cedis, which means he has bought it at a what? Discount. Kwabena also goes and the market value is 500 cedis, but Kwabena is not a very good businessman. So instead of buying it for 500 cedis, he ends up buying it for 600 cedis. He has been cheated because he's buying it at an inflated price. Do you get me? Kofi bought it at a discount price. Kwabena bought it at an inflated price. So which of them is a better businessman? Type your answer. Is Kofi the better businessman or Kwabena? Kofi bought it at a discount. Kwabena bought it at a discount at an inflated price. Which of them is a better businessman? Let me see your answers. Kofi is very obvious. Kofi is a better businessman. Now, the discount guy. Yeah, somebody said discount guy. I like that response. Discount guy. I like that response. So it's the same thing in Forex. Some people buy at inflated prices because they are not very well informed traders. Informed traders never buy at a discount at an inflated price. They always buy at discount. Now, once you establish your daily range, Fibonacci will help you. Me, I've been using it for quite some time. So even without plotting Fibonacci, I know where the discount is. But it's new to some of you. Some of you may already know it, but I believe it's new to the majority of you. So once you have established your range, that is after you have established that the market is a bullish market. Now we are waiting for price to come to discount for us to buy. Now, how do we know it's in discount? When price falls below 50%, can you see 50% over here? Type yes if you can see 50% equilibrium. 50% is the fair market value. Type yes if you can see 50% equilibrium. Very good. So it's fair market value, but we are not even interested in buying it at a fair market value. We want discount. So we are patiently waiting for the market to come to discount. Now, all the prices below 50% are discount. This is 62%. It's a discount price. We have 70.5, also known as OTE. Now, OTE means optimal trade entry. It is also discount. And 79% is deep discount. Sometimes it comes that deep. Now, I took this trade. Let me see those of you who have been learning. I waited for this trade to come to 79% before I bought it. Now, you may be asking yourselves, why didn't I buy it at the other discount prices? This is the reason. I looked to the left. That was Friday's price action. Then, this is a support level. But this is a bullish engulfing pattern. Can you see the bullish engulfing pattern? Let me highlight it. Let me see those of you who have been revising every day. But I want to make your work less difficult. So let me highlight it. Can you see it? Can you see the bullish engulfing pattern? If you can see it, type yes. Type yes if you can see the bullish engulfing pattern. Very good. So I realized that price was at a support level, and the support level has happened to be last week Friday's low. But I also saw that there was a bullish engulfing pattern there. So I knew price was coming down there to find support. Let me place a horizontal line there. You see? I have placed a horizontal line there. Now, another reason why I knew it would come down there is because there is a gap over here that price had to come down and fill.